Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the first edition of Market Today in the new financial year FY26. Warm welcome to all of you and a very happy new financial year. But we've ended FY25 on a positive note when we talk about the Nifty returns, the broader markets returns as well. It's been the financial services sector that outperformed all the other sectors in FY25 with a 19% surge. We've also seen metals rally in trade as well. What we've also seen is that the pharma index has also seen double-digit returns, 10, 11 more percent of gains for these particular sectors as well. And remember, this comes in after 5 months of pain in the second half of FY25 that we had all witnessed. So while the bears bared their fangs in FY24, at least in H2, in FY25 in H2, what we've actually seen is that the bulls have actually managed to hold their ground in terms of 5% move that we've actually seen on the Nifty. Not too much, but still holding on to positive gains for the second consecutive fiscal year that we have actually seen. What we've also now going to be seeing is as we begin this new financial year, there'll be a whole host of moving parts. First of all, we have to be bracing up for April 2nd tariffs or the announcements which have already caused a lot of nervousness across global markets, including in India as well, all on the last 3-4 days or so. Now, what we are also given to understand is that the global markets, the US markets, slipped quite a bit and then they recovered towards the end of the session. Asian markets, there was a havoc on Monday. Tuesday, there is some sanity returning, and all of this was being caused by the tariff news as well. Now, of course, fingers crossed, we'll have to see, because Donald Trump has really said that he wants to go all out with no exceptions starting April 2nd, putting in place reciprocal tariffs against all the countries that the US is trading with. Now, when we look at the kind of handover that we have got for the Dow Jones, there was a percent hike. The Nasdaq Composite fell by 0.1%. S&P 500 overnight bounced back from earlier losses to end the session about 0.5% higher, even though S&P 500 has posted its worst month and the quarter since 2022. Asian markets were seen somehow crawling back to gains this morning after yesterday's havoc play. So you've seen the China index, the Hang Seng, even the Nikkei and the Kospi up and about. Despite that, the Gift Nifty is getting adjusted for 2 days now. Remember, that's indicating a muted start below 23,500. So we'll have to see how that one also plays its part. There'll be, of course, an eye out on gold prices as well, which are soaring to newer highs. So we'll have to keep an eye out on that as to how that plays in. $3,100 an ounce is something that we've seen in the international gold prices, and that continues to soar on the back of a lot of uncertainty. So as we begin this new fiscal year, we thought, why not to get you the best of the market voice that we have today to explain to you what should you be keeping in mind as you revise your trading strategies and investment strategies for FY26. With a very warm applause, we are now going to be welcoming Ms. Devina Mehra, founder and CMD of First Global, on the program. Warm welcome to you, Devina ma'am, and thank you so much for taking the time out. Like I said, who better than you to kickstart the new fiscal year for all our audiences? It's always been a pleasure and of course a learning experience to speak to you, to understand from the wealth of experience that you bring in, decades of looking at the markets and the various cycles that you've already seen so many times over, which is why your undying smile continues despite the 5 months of pain that we have actually seen. So thank you so much for being with us on the program. Tell us, ma'am, what is the sense that you're getting? What is the first message that you want to part to all our audiences and viewers and investors as they begin this new fiscal year with all those moving parts that I was mentioning? Uncertainty globally, tariff wars happening, 5 months of pain, so the nervousness still there, jitteriness still there, even though sanity is returning. What is the message that you'd like to tell them?
Good morning, Sakshi, to you and to your viewers. And yes, the new financial year starts. One thing which I always tell people at the beginning of a financial year, or for that matter, the calendar year, is that look at your asset allocation. So it's always a good time at the beginning of the year to look at how your assets are allocated between equity, fixed income, gold, real estate, if you have any, and alternative assets like crypto. And as in Google Maps, you have to first put in where you are, the starting point, before you go to where you want to be. But coming to whatever you think is a sensible equity allocation to you for you, and let me tell you, equity is money you should typically not need to touch for 8 to 10 years. That's what you should put in equity. So therefore, I also tell young people who tell me that should I put 100% in equity? No, you should not put 100% in equity because there are always unexpected things that come up. You might lose your job, you might want to study further, there might be a medical emergency, you might want to buy a home, whatever.
Yes.
So, but whatever is your equity allocation, it is time to be invested. As you said, I mean, 5 months of pain is not much if you look at what happened in the last 5 years.
Yes.
It's only that a considerable number of the proportion of the investors have entered only in the last 5 years, and therefore they do not remember the cycles. And yeah, in fact, last year the euphoria was such that even seasoned investors were not really willing to listen to sensible talk of risk management and all that. I had family offices telling me that. I don't have unrealistic expectations and I'm happy with a 35% compounding. So that's the
Okay.
expectations that move to. And but if you, as I said, if you are in a broadly steady, well thought out portfolio skewed a little towards large caps, I don't think the risk is high at this moment. I mean, which is not to say that there cannot be any downside from here, but
Okay.
that debate, as I think, must have spoken on your channel also, that 2010 to 20 was a really um, bad decade in terms of returns for
Yeah.
Indian market. That whole decade, that 100 rupees became 230 rupees, whereas in fixed deposit itself, you would have got 200,
Exactly.
200. In dollar terms, there was no return for a whole decade. So that's what created the room for this bull run. And I don't think the large caps, you are in danger territory. In small caps, yes, because small caps, for one thing, one is the level of the index, where also there have been huge uh, you know uh,
Corrections.
corrections is like a mild word when you say that in 2008-9 the small cap index fell 80%, so that's
Yeah.
not a correction, that's a bloodbath. And then that index level came back after 8 years. There was another mad bull run for 2 years, and then again it fell 65%, almost two-thirds. So that's the nature of that. And plus, the really important thing is that there's no use saying that I had bought this thing at 100, now it is 60, I'll wait till it is 100 again. Some of those stocks never come back. The stocks that are do well in a euphoria, often after the market falls in the next bull run, they are not the same stocks that come back. Many just disappear. Let alone small companies, even companies like Reliance Power disappeared. But even if you don't disappear, I mean, look at DLF.
Correct.
After its IPO, for after a couple of months, that price was not seen for decades, even though the company continued to operate. So always, don't get married to your stocks.
Yes.
And a stock that is down 30, 40, 50% may still be a sell. So move to what is the sensible place to be invested now. You can make it up in another strategy, in another stock. Like last year, a lot of people got out of large cap SIPs and put it into small cap SIPs.
Yes. Yes.
So, I mean, SIPs you should continue, but maybe not in the same thing where you were doing the SIP.
Perfect. So many learning points from what you've marked out for us. First, starting point is your asset allocation. Even if you're young, do not invest 100% in equity. There needs to be a well-diversified portfolio because you need to be prepared for emergencies. Don't get married to your stocks. So that's something that you should really look at. In case you made a mistake, look at a better one and, take that advice from professionals like Devina ma'am's companies. And of course, 8 to 10 years is a long term, and that is the kind of vision that you should have for the markets and when you're, investing in equities. But Devina ma'am, of course, this looks like a small period when we, talk about the last 5 months of pain. When you look at the last 2 decades, 3 decades, because you have seen so much, I want to understand from those fresh investors, first time investors that were riding on the bull run of the first half of the FY25, and they were thinking that the markets are so resilient, there is nothing that can put down the markets markets, and then comes the reality check of October, and the markets could not just sustain themselves. Be it any positive news could not provide that fillip. Tell me, what is the biggest learning from for these fresh investors and first-time investors, ma'am?
The learning should be that equity returns are not predictable and they are always lumpy. So there was this book on Rakesh Jhunjhunwala, which a lot of investors look up to. And to me, the real there's only one line in that book that really stood out, and that was Rakesh saying that I made a lot of money in 1989 to 92, in 2003 to 2007, and 2009 to 2011. And he said in between there were even 5 years where I made no money. So he understood and had the discipline to know that equity returns are lumpy, that
Yeah.
in 2 years you can get 5 years returns and so on. I mean,
Yes.
just to give some context, from 1994 to 2003, the net return from the Sensex was zero,
Wow.
and 9 years. And then from 2003 to 2007, the index went up 6 times. So
Wow.
that's
Yeah.
the nature of the equity markets. So that's the thing. As they say, that learn from your own mistakes, but even better if you can learn from other people's mistakes.
Fair point.
So that's why, and if you look at 18, 19 years of history, every year the index corrects for 10% plus, barring I think 3 years, and one of those 3 years was 2023. So it's only after 2 years that you saw that correction. So it was nothing unprecedented or unexpected. That's the way equity markets are. That's why it should be long term money. And one other thing which I forgot to say in the asset allocation, that you must always have allocation to global assets also.
Yes. Yes.
India
Yes.
is not
Absolutely.
worth, India is less than 5% of the world equity markets. And you're already exposed to India. Your career is in India, your home is in India. So at least on the investment front, diversify. And also this number I give often, that when I started working, the dollar was 12 rupees.
Yes.
So it was 90% in the course of a career. So when you're talking long-term financial goals, something you're saving for 10, 20, 30 years away, you cannot forget this. So, so our grandmothers were not wrong in buying gold, because
Yes.
at that time that was the only currency hedge available. Now you have more uh, global assets you can choose from, and that actually the dollar chart of gold shows that gold has been an extremely volatile asset. The chart looks good in rupee terms because it's a rupee depreciation chart essentially.
Yes.
So
Yes. You are. So these
otherwise,
are a lot of. Yes. Yes,
60%
ma'am.
from tops and so on.
Absolutely. I'm hoping that everybody is really taking all of this down with a pen and paper. Even if you don't, we are going to be chunking this out and playing it across social media. These kind of, wisdom, pearls of wisdom you rarely find. And that is why we get Devina ma'am often on our channel to explain to you how do you really, know where are you making the mistakes and you avoid them. Devina ma'am, you rightly said that, global exposure is also important. But I want to know, most people then think that global exposure would mean, okay, investing maybe in a FANG or a US NASDAQ. Is that enough? Should one really look beyond it as well as, an investor who's really planning for 20, 30 years down the line kind of investment portfolio?
Yes, definitely you should look far beyond that. The reason why you hear only this in the Indian market is because most players in the Indian market don't have the expertise to tell you anything more than that. To buy the
Yes.
5, 7 US stocks, and maybe buy the 2, 3 Chinese stocks, or buy the NASDAQ ETF or something like that. The point is the US is not the world. And while it's the largest market, of course, but there are times no theme lasts forever in market, no geography, no asset class, no sector within a country. So US has done extremely well in the last 10, 12 years. That doesn't always hold. So if you look at, I talked about that period of 2003 to 2007 when India's indices went up 6 times. That same period, emerging market index overall went up three and a half, 4 times. And that period, US totally underperformed in spite of the fact that it was not coming off a high. It was already in the doldrums after the tech crash.
True.
And still that 4 or 5 years, it gave only something like 65% return when, this was the, and that's why at that time the narrative became that US is over as an economy and now it's the century of India and China, or BRICS was coined. So these are all narratives. The point is that US has been outperforming a long time, especially some of these tech stocks. And we were watching to see when that outperformance ends. I mean, we've not made the call fully yet, but I think uh, Trump's coming has kind of hastened the end of the outperformance. That's the hypothesis. So for now, in our global funds, we have gone somewhat underweight US. We've increased fixed income component a little. We've increased Europe. We are somewhat overweight China, slightly overweight India also.
Okay.
So that's broadly what we are doing. But the point is that, as I said, the US is not the world. It's a large chunk of the world, so it is not good enough to just buy a Nasdaq ETF. If you remember, there were a whole lot of Nasdaq
Yes.
funds, etc., launched in India in 2021. And
Yes.
in real time, not in hindsight, I had said that, this Nasdaq has done extremely well for 3 years. That, this is not the time to invest. And sure enough, 2022 was a disaster. It was
Yes.
down 40%. The FANG stocks were down between 50 and 80%. And then people came and asked me that should I now exit? I said, now don't compound a
No.
bad buy with a bad sell, because a stock down 50% can still be an exit. But a major index down 40%, you are more likely to see a bounce back, which is what
Correct.
happened. In 2022, NASDAQ was almost the worst performing index in the world. And in
Yes.
2023, again became the best performing. So that's how the, giant wheel turns.
Yes, absolutely. That's the right word. The giant wheel does turn, and you need to know, and of course, people like you are easily able to identify when the tide is turning. But retail investors often get caught in between fear and greed every time, and in this cycle, they always, tend to lose out as well. So, ma'am, you did talk about gold as well, and gold we've seen, outperform by a wide margin, 31, 33% for gold and silver for this year, vis-a-vis Nifty's return of 5% in FY25.
Right.
And now, so many people are coming to me and saying, okay, now can I invest in gold? Because it's already rallied so much. And so again, the same kind of a question. They must be coming to you as well. What are you telling them now?
So I mean that's the FOMO feeling, and we are very hardwired to have FOMO. So we
Yes.
should be careful. I always say that have gold as part of your asset allocation, except that it should not be maybe 30% or something, but have a reasonable allocation. And now is not the time to really increase that allocation. I think,
Yes.
large part of the run up has happened. And yes, last year was very good for gold. And in between also, if you see, I think FY19 was also very good for gold. So there are, years when it does very well. And that's definitely this year has been between the rupee depreciation and the dollar price. It's been a super performance, gold and silver, both of them. But I don't think that, as I said, have an allocation. Don't keep tinkering around with your allocation all the time for everything. Like equities also, all the websites will show you that this is the 20% compounding. But if you look at the data, you will find SEBI data that the majority of equity mutual fund holders do not even hold a scheme for 2 years. So you often enter and exit at the wrong time, and that's where you have to hold yourself back and be disciplined about it and stick to some kind of asset allocation, not get carried away by greed either. So, that like when it looks that making money is very, very easy, that's when you
Yeah.
need to be cautious. That's when you should be asking that should I be invested or should I not be invested, rather than when the market has fallen.
Yeah.
And you talk about global investing, that how does the small investor do it? So this is a cause for me, because I realize that Indians typically don't invest much globally.
Sure.
And that is why we have a product that invests in all geographies, all assets starting at $10,000. So that's
Wow.
about like 8.5
Okay.
lakh rupees. And normally in a private bank, you will not get that kind of mix for less than $1 million, but I
Yes.
want people to start. So that's the whole point.
Okay, I would urge all our viewers to definitely look it up on First Global's website and find out for yourselves how you can really access that for that cost, and of course get that global exposure if you're thinking about that now. Ma'am, lastly, tell us FY26. Now, what are the key themes that you believe in equities are likely to outperform? If one is now looking at the last 5 months of correction and now is looking to increase their allocation, thinking that at least some time, if not immediately, the market's tide will turn, what is it that they should keep in mind?
So, I mean, we of course mostly do a bottom-up stock picking, but if I look at where we have been overweight, let's say from beginning of 2024, it has been pharma, IT, auto components. So that still continues. We've added some banks and financials in our last rebalance. So we look at everything from scratch, as we say, from base zero every quarter. The last rebalance, we've added some banks and financials, though we are still underweight. In fact, we are now wondering whether to remain that underweight or not.
Yeah, yeah.
And capital goods, industrial machinery, we were overweight from October 21 to October 24. We cut back a lot. But then after the prices fell, we've added back one or two in the January rebalance. So now April is coming around. So maybe, in another 2, 3 weeks, we'll make some changes. So that's still on the anvil. But I mean, the reason we do a base zero investing is that otherwise you always think that what you are holding is the best thing to hold. It's something called endowment bias. So you have to forget about what you are holding and say, today, if I had cash, where will I be?
Yeah.
So that's the picture.
Okay, and good to also know what should we, avoid at this point in time. Where do you think there is still going to be the impact of the volatility or uncertainty, or the tide is still yet far away from taking off? Where do you think people should be very, very cautious even now?
So even the small cap, micro caps, look very carefully at what you are holding and see whether those things still make sense. Otherwise, be ruthless and get out of whatever doesn't make sense. I mean, that's not a category you can say anything about as a category as a whole, because there are companies which look good there and do well, but you have to be very careful.
Okay. Ma'am, do tell us when we look at large caps at this point in time, how does one really identify the right basket of large caps and how much large caps to hold within the entire equity portfolio?
Will be quite skewed towards that. And of course, see, now the SEBI definition of large cap, mid cap, and small cap is such that the mid caps are also fairly large in size, because now SEBI is not giving market cap cutoffs. It is like top X number of companies, and uh, no, I think top 100 companies and 250 companies, something like that. So I'm talking just, I mean, it need not be technically large cap, but basically companies of some reasonable size and some reasonable history. And of course, then you have to look at the companies individually. You can't just buy randomly. And we believe in having a diversified portfolio. So our
Yeah.
scheme is called India Super 50. So we would typically have 50, 60 stocks at
Okay.
any point in time. So it's part of our risk management. So also that we do not want too much exposure to a single sector and so on.
Yeah, yeah. Ma'am, I do know that you never give, when we talk about the levels on the Nifty, but it's good to understand from you, where do you think are we headed into FY26? We have started to show a little bit bounce, but are we still very far away from testing those peaks of 2024 that we saw on the markets? Is it still going to be a very time-taking process?
It's very hard to predict that, Sakshi. As I said, I think we are somewhere in the bottom range, which is, as I said, not to say that we can't fall another
Yeah.
3% or 5% or something like that. But now the risk of the quantum and the probability of the fall is less than the fact that you will miss out on a big up move, because I think I've given that statistic earlier also, that in 40 odd years, if you missed out on the 10 best days, you miss out on two-thirds of the return. So if your 100 rupees had become
Yeah.
75,000 in 40 odd years, you miss out on 10 days, that instead of 75,000, now you are at 25,000. That's the kind of danger of missing out on the up days. And these sharp up moves always come when there is fear, uncertainty,
Yes.
anxiety. In They don't come in a mad bull run. So they will not come in the market that you saw in the first half of the last financial year. There, the move is always gradual. The sharp moves come when the market is down. So that's why as I said, the risk reward is now that you will miss out, more likely to miss out on the up move. If there's a little bit of a down move, fine, you can, ride it out. Uh, and also you don't know whether that bottom happens next month or, 4 months from now. If you had been waiting for a correction to
Yeah.
invest, a lot of people before, when the market was at a high, said we will wait for a correction. But when the correction comes, they kind of freeze.
Yes.
So
Yes.
if I go back to COVID time, no, and this is on public record because it was on Twitter. So on on March 2, 2020, I had tweeted that something very strange is happening. And we went totally risk averse, both in our global portfolios and India portfolios. And in the COVID fall, we were largely protected. I think we fell some
Yes.
8%, 10%. But then, just 3 weeks later, on March 23, we tweeted saying now time to be back in the market.
Yeah.
And if you have not invested, then in 5 weeks, you would have missed out a 30% move, both in India and globally. So that's the whole point, that most of the time it makes sense to be invested. When things look uncertain, in a PMS, we buy hedges. Sometimes the hedges go unused, so you just have a cost, but that's okay. I mean, you always manage for risk first.
Okay, always manage for risk first. Well, we can go on and on listening to you, ma'am. It's always music to our ears. But we'll have to let you go at this point in time and we'll catch up with you very, very soon yet again. Hope this year turns out to be a fantastic one for you, the entire team at First Global. And of course, may you continue to, tell us and guide us all through this fiscal year and our viewers as well, what is the right way to go about investments. Always a pleasure, ma'am. Thank you so much for taking the time
Thank
out.
you, Sakshi, and I hope it's a great year for everybody watching.
Thank you so much. Fantastic speaking to you, ma'am. Let's get back to the markets, viewers. We have started on a little, somber note. You can see 23,400. The first tick was below that, but we are slowly and gradually inching up forward as far as the Nifty is concerned. We have, among sectors, it's autos that are driving the show. It's media stocks, oil and gas, infra. Small and mid caps are showing us some gains. But what's fallen behind? IT again. Remember, the tariff talk starts tomorrow, and that's going to be important to watch out for. 1.5% lower for the IT index. Realty, consumer durables, financial services, private banks, these are the pockets that are actually just stepping back at this point in time. But what is doing well? Vodafone, top mover on the F&O space, and there is this news that has really caused it to rally. Vodafone Idea has mentioned over the long weekend that we saw that the government will convert its dues into equity to get shares worth 36,950 odd crores at an issue price of 10 rupees per share. The government's holding will increase to 49% from 22.6%, and the promoters will continue to have an operation control of the company as well. A 10% circuit for Vodafone Idea, 7.4 at this point in time. Let's look at some of the other stocks that are going to be important to watch out for. Watch out for ITC. The board of Aditya Birla Real Estate has approved the sale of its pulp and paper business to ITC in all cash deal. So AB Real Estate and ITC, you can look at both of these stocks. Let's look at HAL. That's another important one to watch out for today. It signed the largest ever contract of defense. The contract's worth 62,700 crore rupees with the defense ministry, and you do see a sharp 6% rally on this one. 4420 back on Hindustan Aeronautics. So keep an eye out on that one as well. What we are also going to be looking at is how some of the other stocks are moving. Trend, it began its rally last week, and you can continue to see its strong momentum, about 55.16 kind of levels being seen, 3.5% higher. We have our guest now on board. Mr. Kunal V. Parar, Vice President Technical Research at Choice Equity Broking, is joining in. Kunal, warm welcome. First up, happy fiscal new year. And tell us, what is the sense that you have? We did see some sanity return to the markets last week when gradual recovery was taking shape. What is the sense that you're getting at the beginning of the new financial year? Are the ghosts of the past buried? Are we out of the woods when it comes to the sharp corrections, and are we beginning this new year on a positive note?
Happy new financial year to you too. And no doubt, right now we have been witnessing some kind of short correction in the beginning of this new year. Nifty is trading at 23,438, but I think we may see some good kind of bounce back as well in the Nifty, because Nifty has been trading above its 50 days moving average. Even on early chart, Nifty has been trading on an 100 mm. So positive trend is there based on the early chart and daily chart. Not only this, if you look out at the option chain analysis, then on the call side we have been witnessing some long build-up position. However, on the put side, we have been witnessing on the short side position throughout the strike price. So it clearly indicates for an upside momentum only. And if you talk about FII data, then in March, FIIs were like a net buys of more than 6 to 7,000 crore. So even it gives some kind of positive sentiment in the market. So one can get into the Nifty future with a strict stop loss of 23,300. And if we talk about upper side momentum, then 23,600 would be the first target. And if Nifty breaks this 23,600, then ultimate target would be the 23,810. And let's say if Nifty breaks this 23,800, then one way upside momentum would be there up to the level of 24,500. So at present level, we may witness a good bounce back in the market.
Okay, got that. Let's look at some stocks then, Kunal, at the beginning of the show. Let's look at the broadest index. Like I mentioned, Vodafone is at a 10% circuit. You have Vito switchgears at about 11% higher. You have Hester Biosciences, Salazar Technologies. You also have names like HBL Engineering, Indus Towers. A lot of these stocks that are buzzing in the broader markets. In the Nifty next 50 names also, let's see. HAL, of course, I marked out. Strong momentum can be seen. Avenue Supermarts is up. Many such stocks that are moving higher. What would you do on Vodafone today after that 10% circuit? The news is pretty positive. It has come after a long haul of pain that investors have felt. In fact, a lot of them would have exited on the lower end as far as Vodafone is concerned with the kind of pain that was emerging. But finally, there is this news that the government is going to be changing debt to equity. Government is going to be raising its stake in Vodafone. What do you think this means for Vodafone Idea and for retail investors holding on?
Time being, relief is there for the Vodafone Idea, because government is going to change its debt into the equity. And I think Vodafone Idea is 30 days to complete this procedure. Once they will get the approval from the exchange side and CB side. Right now, Vodafone Idea is trading at 7.48, and we may see a good upside momentum to the level of 8.50 to 10.50. And if you have a position particular in this counter, then please hold this counter, because the downside stock has a strong support at 6.50. And even before stock took the support of the same, and afterwards it went up to the level of 10.50. So we can expect the same replicate momentum. Now again, if we witness some correction in the counter up to the level of 7 or 6.80 or 6.75, then it would become a good buying opportunities for retail investors as well, for an upside momentum up to the level of 9 to 10.50. So I think based on the current data, based on the current scenario, and based on the chart, I think six level would become a good strong support for the retail investors. So nothing to worry about this counter as of now.
Okay, got that. So that's as far as Vodafone Idea is concerned. Let's look at some large cap names also that are doing well. Trent is about 3.5% higher. The rally started last week, and the stock is now showing us more promise. Brokerage houses are giving higher targets on this one. How would you look at a trend?
Stock looks very attractive on a daily chart. Stock is just coming out of its rounding bottom formation. Even if you talk about the early chart, stock has been trading above its 200 MA, 100 MA, and today's stock is trying to give a breakout of its range bar momentum of last three trading sessions. So the way stock has been trading, I think one should get into the stock at the present level right now. Trading at 5,500 downside, strong support comes at 5,290. If you talk about upper side target, the way stock has been trading on a daily chart, I think one can keep first target at 5,670. And if stock breaks this level, then further upside would be there up to the level of 6,000. So we can expect some kind of 8 to 9 percentage of return or momentum in the counter. So definitely one should get into the stock with strict stop loss of 5,290.
Okay, got that. Let's look at some of the other stocks then. HAL, that's another one that I wanted to bring up to you. The top moving PSU stock at this point, 4% higher, 4340, can be seen on Hindustan Aeronautics. Let's look at the stretch chart. A last 1 month chart will show you the kind of recovery that we have actually seen on HAL. After 4 or 5 months of sharp correction in the last 1 month alone, 36% of a rally has already been seen on HAL. So difficult to catch the bottom. Those who have missed this recent bottom, now what should they do? Biggest ever order that has come into HAL's fold now, Kunal.
Well, yes, we have seen a very good recovery and good profit, good returns, particularly from this counter since last 1 month. More than 30% is the momentum that we have witnessed in this counter right now. Stock is trading near to its strong resistance of 200 days moving average, and that is placed at 4,371. So let's say if stock is sustaining above 4,375 or 80 level, or if stock sustain for a couple of days above this level, then only I'll recommend it to get into the stock, because if any close below this level, it may attract towards downside level up to the level of 4,000. So but from my side, please avoid this stock as of now. If stock sustain above 4,380, then only one should get into the stock for an upside momentum up to the level of 4,800, and above it would march up to the level of 5,000.
Okay, fair point. I hope this has also helped you out in understanding what to do about this. Another stock that I wanted to pick out for all our viewers to see is BSE. Remember, this is one stock that has been consistently now again recovering in trade, and this is after, remember, BSE has now recommended the issue of 2 free shares for every 1 share held by its shareholders on the record date as on March, and the record date is yet to be known. BSE made this announcement on March 30th, and you're already seeing in the last 1 month how 26% of a recovery came in on BSE stock, and now the bonus announcement has come in today. Again, there is a 1% uptake. Kunal, how would you really look at BSE? Avendus Capital has again given a buy rating with a 6,500 target price on BSE, so the brokerage houses are positive on this one.
Well, definitely stock looks very attractive, and no doubt the bonus news is there. Even BSC got some good news even from the SEBI itself, and based on the SEBI's rules, I think even NSE has deferred its weekly expiry from Monday. So that's a good that's a good positive news for the BSC, and based on that news, we have witnessed a very good upside momentum in the last trading session. Right now, stock is trading at 5,532. We may see some good upside momentum up to the level of 6,000. And if stock breaks this 6,000, then it may march towards the level of 6,500. But I think for fresh position, I think one should avoid this stock as of now for creating any fresh position, because risk reward is not in a favorable level for creating a fresh position. But anyone who is holding this stock in his portfolio, please hold this stock. 6,400 would be the targets.
Got that. So that's the view coming in on BSE. Let's look at some other large caps again. IndusInd Bank topping the charts as far as the Nifty is concerned. A 4% uptick on this one. There has been a gradual recovery on this as well, but this has been a lot of volatility on the stock in the erstwhile past. And what we've seen is that the investors really got the shock and did not know how to react. There were fraud statements that were coming in. The management also coming out in clarification saying that Q4 will take the hit, and thereafter they would be back into profitability zones as well. But look at the sharp fall that happened, and then there has been a lying low. But last few days you've seen some kind of bounce return. On last 1 week chart, if you see, there has been a 7% improvement also. IndusInd Bank, does this give you the confidence at all, Kunal?
Well, definitely. Right now, trading at 676, and after the massive correction, the counter stock is trying to neutralize its selling pressure, and trading at the 676 level. One can get into the stock at present level for trading perspective. However, stop loss would be at 640 level, which is like far below the comfort zone. But if anybody want to take a call, then please maintain this 640 as a strict stop loss. If you talk about the target size, then the way stock has been trading on a daily chart, one can keep first target at 710, and if stock breaks this level 710, then further upside would be there up to the level of 755. So yes, these stocks looks very attractive for trading perspective.
Okay, fair point. So that's as far as IndusInd Bank is concerned. Autos are driving in a faster lane now. A percent higher, the top moving sectoral index at this point in time. You see, Hero Moto is up 2%. M&M is also rallying in trade. Bajaj Auto, remember, auto sales is something that you're going to be keeping your eyes out on for March as the sales figures start to pour in. What's the sense that you're getting on the auto pack at this point in time? Of course, a lot of price hikes also come in to effect starting 1st of April. Many of the four-wheeler companies, two-wheeler companies announced their price revision starting 1st of April as well. How would you look at the auto pack?
Well, if you talk about overall auto counters and auto stocks, the way all the stocks have been trading on a daily chart, I think one can keep an eye on Tata Motors. No doubt, in the last week, Tata Motors gave a gap down opening and right now trading at 681 level, but stock has found strong support somewhere around a 660 level. So I think we may see some good upside momentum, and even the stock may fill this gap which it formed during the last week. So, stock looks very attractive in terms of risk reward ratio as well. One can get into the stock at with strict stop loss of 660. Right now, stock is trading at 681. And if you talk about upper side target, then the way stock has been trading on a daily chart, we may see a first target at 700. And if stock breaks this level, then 725 would be there. So, amongst the other counters, I think Tata Motors do some good for our retail investors, retail traders.
Okay, fair point. Hopefully, this has really helped you understand how to go about the auto pack as well today. While the Nifty is still flat with a negative bias, it's now inching back above 23,500 odd levels. So keep an eye out on that. We are strongly up from the opening lows at 9:36. So first 15-20 minutes are out already, and you can actually see slow gradual recovery. Although IT pack still continues to be reeling under pressure over a percent cut. Real estate, financial services, private banks, and the Nifty Bank still in the lower end, but things could actually improve for the better. Let's look at the broader markets that are showing us some gains. Mid caps are up by about half a percent, and so are the small caps too. Within the mid caps, of course, apart from Vodafone and Indus Towers, the telecom pack, you also have names like Yes Bank, PI Industries, Oro Pharma, Tata Communications, AB Fashion, Bank of India, a lot of stocks that are buzzing in the small cap, mid cap basket. Let's also look at the small cap stories too to see if there are any interesting names there. HBL Engineering is the top moving one, 10% higher. Tata Tele is up 6%. So Tejas Networks, the entire telecom theme is back. Do you want to come back to the telecom theme once again and tell us, in case you find more interesting names than Vodafone that we discussed as well, where can one keep their attention?
Yes, definitely. I think Bharti Airtel looks very attractive right now, trading at 756, near to its all-time high, and
Okay.
it may enter into the uncharted territory. So the way stock has been trading on a daily chart, one can get into the stock at present level with strict stop loss at 1720. And if you talk about upper side targeting, 1800 would be the first target, and if stock breaks this level, then 1900 would be our ultimate target. So still, this stock looks may do some good for our retail investors.
Okay, fair point. Got that. Let's also look at some of the other interesting names. Remember, we were talking about the auto space viewers. So apart from the pure play OEMs, the original equipment manufacturers, the car manufacturers, and the two-wheeler manufacturers, auto ancillaries are also doing very well today. You look at say J Bharat Maruti, Shivam Autotech, Autoline Industries, Rane Brakes, Talbros Auto, Automotive Stampings of India. That's also looking well, and even names like Exide, they are also buzzing. So the battery space is also looking up at this point in time. The auto ancillaries are definitely looking up. Anything that takes your attention here, Kunal, within the auto ancillary pack as well?
Yes, definitely the way auto ancillary specs is trading, I think one stock looks very attractive on a daily chart. It's Extra Industries. Since last few days, I have been like keeping an eye on this stock. Stock has found a strong support near to its 340, 330 levels, and right now stock is trading at 365. I think we may see a very good upside momentum with the counter up to the level of 375, and if stock breaks this level, then further upside would be up to the level of 400. So one can get into the stock at present level with strict stop loss of 350.
Okay, let's again look at some of the other spaces. Defense, apart from HAL, you can also see MTR Tech, Astra Microwave, TCX Systems, Paras Defense, Solar Industries, Unimech Aerospace, all of them actually up and about and supporting the sentiments in the defense pack. Then you're also looking at the travel and the tourism theme also buzzing in trade today. A lot of QSR space stocks are also up and about. Look at Barbecue Nation, 6% higher. Restaurant Brand Asia, 5% up in trade. You also have hotel stocks, TGB Banquets, Royal Orchid, Samhi Hotels, all of that is buzzing. So hospitality, tourism, QSR, the entire space seems to be buzzing, and the markets are also in the green. 23,540 for you on the Nifty. Within the tourism hospitality space, what takes your attention, Kunal?
Well, the way all the counters are trading on a daily chart, I think we may say a very good upside momentum in this new quarter because number would be at a better level because we have seen a very good we have seen a very good economic activity that was carried out in Prayagraj, and even a government's number is like on an extraordinary level. So this would be like positive for all the our Indian hotels and service industries. I think one should keep an eye on the Indian hotels. I know trading at 794 level. One can get into the stock for medium term to some short term, not for trading perspective. Downside strong support comes at 760, and if you talk about upper side target, then first target comes at 840, and if stock breaks this level, then 808 will be there. I think I think from industries. Sector, one can keep eye on this Indian hotels, and one more counter is that it's a Indigo, because even Indigo is the most beneficiaries out of this activity. The way stock has been trading on a daily chart, we may see a further upside momentum in the counter up to the level of 5,426 and afterwards 5,600. So one can get into the stock at present level with strict stop loss at 4,950.
Okay, fair point. Got that. 23,543. Any suggestion on the Nifty? Where do you see this going forward? First 15, 20 minutes have been taken out, and we are back into the green, Kunal.
Yes, I think we talk about to go for long in Nifty when Nifty was trading at 23,420. Right now, Nifty is trading at 23,550. Our
Yeah.
first target is 23,600. So let's say if Nifty sustain above this 23,600, then further 200 points of jump would be there up to the level of 23,800. So if you have created any long position, then hold this long position.
Okay, got that. Hold the long position. That's the view that's coming in. Let's look at some of the other moving parts also in the markets. Oil and gas, that's going to be important one to really look at as well. Petronet, LNG, Oil India, IOC, GAIL is up in trade. A lot of changes that are happening, APM prices, hopes, raising hopes that the CNG prices could soon go up as well. Any suggestion on the oil and gas story? Where would you keep your attention?
Definitely the way all the stock has been trading on a daily chart, I think one should keep an eye on IOC because I think we may see a very good upside momentum in the counter. Not only this, this is like the highest dividend paying yield this stock has, and the way stock has been trading on a present level, we may see a very good upside momentum in the counter up to the level of 149 to 160. So double bonanza benefit would be there in terms of dividend and in terms of capital gain. So one can one should eye on this Indian Oil Corporation with strict stop loss of 120.
Okay, fair point. Hope that also brings you, the entire strategy on the oil and gas story. Another space, commodities again, metals, especially the precious metals, gold and silver. Gold continues to rally to newer records. $3,100 an ounce is already being seen, and we had already seen in the last 1 week how 90,000 rupees per 10 grams was already seen for gold in many parts of the country, and now that is also being questioned that how soon can 1 lakh rupee be probably seen on gold as well. Would you look at, gold-related stocks also at this point in time?
Pardon, you were talking about what?
I'm talking about the gold prices, which are soaring to newer record highs. Do you think that should be played by way of stocks like Muthoot, Manapuram Finance, or should one really look at the gold jewelry names, Titan, TBZ, Kalyan? How are you looking at the entire space?
Okay. If we talk about overall, but particularly, I'll keep an eye on the jewelry making stocks. Not only this Muthoot Finance, Manappuram Finance, but the way Titan and other stocks have been trading. I think Titan looks very attractive on a daily chart. Right now, stock is trading at 3071, and the stock has a strong support on weekly chart at 2980 level. So rather to go for creating a long position in the gold, I think one should keep an eye on the Titan because risk reward is in favor for creating a long position. One should keep an SL at 2980. Right now, stock is trading at 3070 level. First target that we can see it's a 3200. And if stock breaks this level, then further upside would be there up to the level of 3380. So Titan looks very attractive in this jewelry sectors.
Okay, fair point. Hopefully, this has also helped you out in understanding, what's ticking higher. There is a recovery within the banks now. Banks is what is lifting the Nifty higher. You can see the Nifty bank that's up by 0.2%. Private banks in the green now. You have the PSU banks that are up by almost 0.8%, and that's where the rally has really come in. Let's come to the banking story yet again. Let's talk about the PSU banks, which are now at the day's high, 0.9% of an uptick. Kunal, what are you seeing here?
Well, we have witnessed a very good upside momentum, particularly in the Kotak Bank, ICICI Bank, Axis Bank,
Yeah.
and HDFC Bank. But right now, if anybody want to get into these stocks, I think ICICI Bank looks very attractive. Right now, trading at 1350 level, and downside stocks strong support comes at 1320 level. And if you talk about upper side target, and first target would be at 1375, and if stock breaks this level, then 1450 would be there. So ICICI Bank looks very attractive from this private banks, and not only this, we have already talked on this IndusInd Bank. So IndusInd Bank also looks very attractive on daily chart.
Okay, got that. I hope this has also helped you out in identifying within the financial services NBFC space. Anything, Kunal?
Well, from this NBFC sectors, NBFC counters, I think Geo Finance looks very attractive right now trading at
Okay.
229, and recently it has taken the support of its 220 level. So one can get into the stock at present level with strict stop loss of 220. If you talk about upper side target, and first target would be at 239. If stock breaks this level, then 254 is our ultimate target. And not only this, even this stocks looks very attractive for medium to long term. And in medium to long term, these stocks may approach its 200 MA, which is placed at 307 level.
Okay, fair point. So Geo Finance is a buy. Within the broadest index, what are you looking at? Nifty 500, Kunal. So many stocks that are buzzing. You have Hester Biosciences about 16% higher in trade today. Then you have Magad Sugar about 13% higher. You also have names like Salazar Techno Engineering that's up 12% in trade. Saurashtra Cement 11% higher. Then names like Vodafone, of course, we've marked. Let's also know Vadilal Industries is up 9%. Again, summer theme probably. You look at all of these stocks and tell us which one takes your attention.
Well, but if you talk about all these stocks, I think, no doubt these stocks are trading at very pretty level, and it is up by on an average more than 8%. So, to find the proper SL would be like difficult in these stocks. So I'll avoid to give fresh recommendation in these stocks. But yes, I think if you have already created a position in these stocks, then please hold these stocks because the way stock has been trading, because most of the stocks have been trading on a bottom level, and from there they are trading about more than 8 to 9%. So we may see a very good upside momentum during an upcoming trading session. So no fresh recommended in these counters, but if you have created a position in these stocks, then hold these stocks. Further 9 to 10% of upside momentum would be there.
Got that. Okay, well then, Kunal, thank you so much for being with us on the show today, helping us out to navigate through various moves that we have seen. The good part is that we are back into the green. You've already given higher levels and suggested a hold on long positions for those who took for the Nifty today. 23,540. We'll continue to track the markets, but the beginning of the new fiscal year has been rather on a positive note. So thank you so much, Kunal, for being with us on this special edition. We'll catch you soon and hope you have a fantastic new financial year ahead. Viewers, we'll try to wrap up the markets for the morning edition now. 23,535, 15 points higher in trade. We are now at the day's high point. You can slowly and gradually see most of the sectors now supporting the sentiments. Autos, oil and gas, PSU banks, broader markets, metals, pharma, barring say IT, real estate, consumer durables and financial services. Rest of the sectors are all up. On the Nifty, you have IndusInd Bank, Trent, Hero Moto, Power Grid and M&M as the top movers. But keep an eye out on the auto space throughout the day today because of the sales figures that will be coming in, and we'll keep you updating about all of those. Infosys, Shriram Finance, Tata Consultancy, HDFC Bank among those heavyweights that are actually putting some pressure on the upside on the markets as well. Thank you so much, viewers, also for being with us on the morning edition. We'll leave you on the market today morning edition right here, but do stay tuned throughout the course of the day. We'll be bringing you exciting conversations from top market masters to help you understand the strategies for FY26. And in case you have to devise a strategy for yourself for FY26, the top stocks to look at, well, you can ask all your questions on daily calls, which I'll be coming back with at 12 noon. Hello and welcome. You're watching Royal Ranthambore presents BT Golf. I'm Sakshi Batra, and the game started off pretty well as far as the Oxford Golf Club is concerned. With me are some of the ace golfers right here. Warm welcome to all of you. Good to have you with us. Let's start by introducing all of you, sir.
Yeah, I'm Sony Thomas and I work for Multihue India.
Okay.
I'm Kailash Monga. We manufacture textile machinery.
Okay.
Hi, I'm Sarachandra Anadata from Broadcom India.
Okay.
I am Vinod Patel, Managing Director of Philpack India Private Limited.
Warm welcome to all of you. Good to have you seeing, kick-starting the season and the grand finale as well for Royal Ranthambore presents BT Golf. Tell us, how's been your expectation from the game today? The sun is bright, the course is pretty good.
All playing good, and it's always nice to be out here in the open. Okay. So golf is always a pro for us. So.
Okay. What's golf to you in one line?
Fun.
Okay. Tell me, do you play together always? Is this a regular four ball? Are you playing for the first time?
For the first time we are playing together.
Okay.
I normally play at Pune Golf Course and sometimes here. But this is a beautiful course. And at my age, at 76, is more of an exercise.
How long have you been playing golf?
I've been playing for about 15 years.
Wow, that's amazing. Tell me about your golf experiences so far. When did you start off? What got you to the course?
I started off in 73 after I finished school. I've been playing for over 50 years now.
Wow.
And I play regularly at BPGC Chembur.
Okay, that's wonderful. Have you played BT Golf tournament before as well?
Yes, I think
How's your experience?
it's been good. It's fun.
Okay, wonderful. Tell me, what are the lessons that you take back into your boardrooms, from the golf course?
Yeah, golf is one particular game where you're playing against yourself. It's not like other game that somebody can hit you and make you out. And the kind of frustration and kind of the, winning this thing, what you have, that is only available in golf. It teaches you a lot of patience. It teaches you how to control your temper. You might hit some bad shots, but the next one, you make a good one, and that makes you come again.
That's a wonderful take.
Game within. It's the game within.
Game within. Tell me, any kind of, networking partnerships that you've successfully done on the courses?
Oh yeah, every time we play in a 4-ball which is new, it's a great opportunity to network. Like just today. Yeah.
That's wonderful. Tell me, one thing that you actually take back from the course in your personal and professional life.
Well, I think, like Kailash was saying, that you every time is it's like a new game, but you learn things that you never did before, and sometimes you take it back, or sometimes even a nice place to even think. So a lot of the thoughts that we get for our businesses or whatever actually happen on the golf course.
That's a wonderful.
At least for me. So it's a good take.
It's a wonderful one. Tell me, if I have to ask you, have you also made like lifelong friendships on the course?
Oh yes, a lot. Oh, yes. And just to add to what he was saying earlier, right? Like a lot of times when you talk to new people, you get new ideas.
Yeah.
And there's a fresh thought that comes to your mind. So yeah, I mean.
Amazing. Tell me what brings you back week on week to play on the course?
It's always a good shot. One of the best shots of the day always brings you back.
Okay. Tell me that one lesson that you want to part to all the young aspiring golfers. What should they take from your experience?
Well, very difficult question, but nowadays youngsters have I don't think they have much of a time because of the present scenario, where people are working late, etc. So normally I've seen a lot of people joining golf at around 45, 50. There are very few who can join at 20, 22, etc. But well, there are very good golfers, and I think even the world scenario, our golfers are making name, and that's a good one.
Okay.
Yeah.
Well, all the very best to you. Yes, you wanted to add
So I just wanted to say I have two young boys.
Okay.
And I always try and get them on the course. It's not only just for playing for today, but even when they get older, it's a game that can, be lifelong.
Yeah.
So for me, that's also a plus. It's not about just being young and getting into the golf course, but also for future.
That's a fantastic take. Well, all the very best to you. It was great chatting with you, and hope I catch up with all of you on the prize distribution ceremony, and let's hope that we get some shots going on the right side. Thank you so much for being with us on BT Golf. Thank you.
Well, in the world of technology and innovation, especially in the mobility sector, we face a lot of developments these days as far as the technology goes, and of course technology being the core base of everything in mobility in the times to come as well. And of course we see that in the present automobile sector developments as well. Well, Uber is now coming up with an autonomous technology vehicle which has been trying to do it for a very long time, and eventually now in Austin they have rolled out, and of course it's been getting a very good reaction. And I'm joined by the Chief Technology Officer, the man who really heads the tech team and developing the technology with Waymo. Thank you, Praveen, for speaking to us. The first question, tell us about a very common question that we get asked in India about the Uber's autonomous technology is how and why did Waymo and you are choosing Jaguar, a Tata Motors product, for its cars in India? I mean, does it support the tech that Waymo will have to offer, and of course with easier integration with Uber with Jaguar? What is the reason behind that, the rationale that I want to ask you initially?
Yeah, so look, the specific car is Waymo's division in a way, and they have been testing with Jaguars it's been running in the US for a long time, and they have pretty strong safety record with it, right? They're pretty good. What we are excited is to be able to launch Waymo in Austin and pretty soon in Atlanta, only on Uber, and you will be able to hail.
All right. Right. When you're venturing into tech, you know the best because you're CTO. The scalability is the factor that you got to be most tensed about, and we stressed about. How are you planning scalability while ensuring safety? Because safety, and we all know that it's Uber's heart. So tell us about the scalability factor.
Sure. So yes, as you say, safety is a pretty big deal for us. And we have safety guidelines we came up with. We evaluate every partner along with that. So that's the thing. Scalability aspect. I mean, when we launched here, we were very even one car first getting it working on Uber, and there are several things that can go wrong, right? So we actually worked meticulously over the last few months to make sure every single interaction on Uber with Waymo works, right? Even unlocking the car and so forth. And there's a strong support structure in the tech with Waymo and us that we integrate seamlessly, even though they're two different companies. And you will actually see experience when you get into Waymo that you have all the safety features that you would have on an UberX, right, on your app, that is available on Waymo as well. Right?
All right. Now, so I'd like to tell our viewers, because the public's going to actually enjoy it, but people want to know the story behind that. So tell us the technical challenges that you faced whilst you were, planning, autonomous technology with Waymo, and in-house problems at Uber that you were facing, and how you scaled that up and eventually solved the problem.
Yeah, so look, I think so. we have been working with EVs for a while, right? If you think about it, every car in EV, there's a charging. It's not like a gas car. So we built the tech already to make it work for EV. Now all these AVs, now without the driver, it's an EV as well. So we use the similar tech that we have built over the years. Now at the end of the day, we both are two separate companies. We have to integrate and work together. So there's a lot of APIs that we integrate with, like what kind of routes we serve and so forth. So there's a lot of integration that we had to do. I can't go into every small detail here. There's a lot of proprietary things.
Sure. Also, you have a heavy reliance with, of course, Waymo and Nvidia and other companies that you're relying the tech on. I want to ask you, how are you going to ensure the interoperability or, Uber's independence remains whilst you're maintaining and, developing such products?
Yes, I think our goal will be, as you have seen in the presentation, we have 14 partners we're working with, right? If you have to have individual APIs for each and every, it's not going to scale, right? We have built a standardized APIs and which will work needed for a ride-sharing industry. So every partner that's going to come in who's going to integrate into it, right? That's how we're going to scale and make these AV partners coming into the ride-share ecosystem.
Well, those were my last two set of questions. Of course, when the autonomous technology comes up, we always have a dream and a vision to get that into India. I'm sure you must have discussed it in-house, and you can't be discussing those details. But I want to ask you, if you look at an India market, what probable challenges do you think persist, and what all needs to improve so that the autonomous technology can come to India then?
Look, the first thing is AV cars work on EVs, right? Making EVs work. And in India, we have a pretty big investment in EV. We signed a deal last week with 1,000 cars in Chennai. Like, that's a pretty big deal. And it's not as simple as EVs coming into it, right? We need to ingest the charging information and how we match, and there's a lot of work that we do, right? I think what I see in India is that preliminary work is going on. Now, when an AV company comes in and makes it work, we are primed and we are ready to make it flip the switch and make it work, right?
Okay,
so that's what.
All right, so we would, if the EV market develops in India, the ecosystem develops in India, we would be seeing EV. Uber autonomous vehicles, which is EVs, coming to the Indian market, or starting with Metro City?
Whenever any of our partners work in India, we'll be able to work with them.
Do we have any timeline in mind?
I can't share it.
Can't share it. Well, thank you so much, Praveen, for speaking to us. Well, that was Praveen, the CTO at Uber, mentioning about how it is ready with the developments and technology. And of course, before I conclude, I want to ask you, which all markets are we trying to look at?
आभार आप सभी का। आप सभी से निवेदन है कि कृपया अपना स्थान ग्रहण करें। भारतीय रिजर्व बैंक के स्थापना के 90 वर्ष के इस समागम में हम माननीय राष्ट्रपति महोदया का हृदय से स्वागत एवं अभिनंदन करते हैं। साथ ही मंच पर आसीन सभी महानुभावों का भी स्वागत व आत्मीय नमन। आज से 90 वर्ष पूर्व भारतीय रिजर्व बैंक ने अपनी ऐतिहासिक यात्रा की ओर पहला कदम रखा था और आज जब हम बैंक के 90वें स्थापना वर्ष का स्मरणोत्सव मना रहे हैं, हम स्वयं को देश की वित्तीय स्थिरता और आर्थिक समृद्धि के लिए पुनः समर्पित करते हैं। इसी के साथ हम रिजर्व बैंक गवर्नर से निवेदन करते हैं कि कृपया अपना स्वागत संबोधन दें।
Good morning and namaskar. Her Excellency, the President of India, Honorable Governor of Maharashtra, the Honorable Chief Minister of Maharashtra, the Honorable Union Minister of Communications, the Honorable Deputy Chief Ministers of Maharashtra, distinguished invitees, representatives of the media, and my colleagues from the Reserve Bank, past and present. It is my proud privilege to welcome you all on this momentous occasion marking the 90th anniversary of the Reserve Bank of India. We are deeply honored by the participation of the Honorable President of India. Her gracious presence has greatly enhanced the importance of this occasion and encouraged us immensely. I am indeed thankful to Madam President for taking out time from her busy schedule for us today. I warmly extend a very hearty welcome to her. I also welcome His Excellency the Governor of Maharashtra, the Honorable Union Minister of Communications, the Chief Minister and the Deputy Chief Ministers of Maharashtra. I also welcome all other dignitaries, guests who have taken out time to be present here with us. 90 years ago, the Reserve Bank of India was established to serve as the custodian of India's monetary and financial stability. Over these 9 decades, we have evolved, adapting to the changing economic landscape while remaining committed to the economic progress of our nation and the welfare of its people. As we entered the 90th year, exactly 1 year ago, we initiated the celebrations with the opening ceremony that was graced by the Honorable Prime Minister. Throughout the year, we organized several high-level events on such diverse themes as emerging technologies and digital public infrastructure. The Conference of Central Banks from the Global South reinforced India's thought leadership in the global community and deepened our understanding of the challenges and opportunities ahead. To engage with the public, we hosted nationwide initiatives such as the RBI at 90 quiz, which received enthusiastic participation from students across the country. We organized an art competition that celebrated the creativity and heritage of India. Sporting events, town hall meetings, tree plantation drives, and blood donation camps brought together our employees and communities. All these events reinforced the spirit of collaboration and service that define the Reserve Bank. We celebrated our past and reaffirmed our responsibility for the future. We reflected on our achievements and rich legacy and recommitted ourselves to realizing the vision of a Viksit Bharat, built on a stronger, more stable, and inclusive financial system. As we mark this milestone, we recognize that the Reserve Bank's role has expanded significantly beyond the initial mandate. Today, we stand at the confluence of tradition and transformation, where the imperatives of price stability, financial stability, and economic growth intersect with rapid technological advancements, global uncertainties, challenges of climate change, and increasing public expectations. The next decade will be crucial in shaping the financial architecture of our economy. We remain committed to expanding and deepening financial inclusion. We shall strive to foster a culture of continuous improvement in customer services and strengthening consumer protection. It will be our endeavor to optimize our regulatory frameworks by balancing the interests of financial stability and efficiency. We will continue to support technology and innovation. We shall remain vigilant, adaptive, and forward-looking. We will continue to collaborate effectively with all stakeholders, governments, and financial sector regulators, among others. We will do everything that is required to improve the financial system by expanding its access, enhancing its efficiency, and strengthening its resilience in an evolving economic landscape. Even as we embrace new technologies and modern regulatory approaches, our core values, integrity, transparency, and commitment to public service will continue to guide us. The trust that the people of India repose in the Reserve Bank is our greatest asset. We are determined to preserve it and further strengthen it in the years ahead. This institution belongs to the nation. We shall continue to take each and every decision driven by an unwavering resolve to serve the interests of the people, the financial system, and the economy. As we conclude this year-long celebration and step into our centenary decade, we do so with confidence, determination, and a clear vision. The journey ahead will demand continuous adaptation and agility, fresh thinking and innovation, collaboration and coordination, and an unwavering commitment to excellence and perfection. We at the Reserve Bank remain fully prepared to meet all challenges and seize all opportunities, to contribute proactively and vigorously to India's economic progress. With these words, I again welcome Her Excellency, the President of India, and all other distinguished dignitaries and guests to this commemorative event. Thank you. Jai Hind.
धन्यवाद महोदय। हम रिजर्व बैंक गवर्नर से आग्रह करते हैं कि वे कृपया रिजर्व बैंक की ओर से माननीय राष्ट्रपति महोदया का एक प्रतीक चिन्ह के माध्यम से स्वागत करें। धन्यवाद। From its inception to a legacy of 9 decades, the journey of Reserve Bank of India has been one of growth, transformation, and unwavering commitment to the responsibilities entrusted to us. During our 90th year, we commemorated this journey with various events and impactful social responsibility initiatives. Let us take a moment to look back at the milestones that shaped us with a short film that captures this journey.
Years ago, on April 1st, 1935, the Reserve Bank of India was established with the mandate to secure monetary stability and operate the currency and credit system of the country. This journey has been marked by various milestones, including nationalization of RBI and banks, launch of various schemes, and the watershed 1991 reforms. As we celebrate this milestone, we reflect on RBI's journey of resilience, transformation, technological innovation, many customer service initiatives, and public awareness. Stability, trust, and growth are the core principles that have defined RBI's journey over the past 90 years, symbolizing its leadership, stewardship, and commitment to maintaining stability of currency and strengthening the economy. The RBI at 90 logo embodies the institution's enduring legacy of stability, trust, and growth, reflecting its pivotal role in shaping India's financial landscape over 9 decades. To mark this historic occasion of RBI entering its 90th year of establishment, Honorable Prime Minister Shri Narendra Modi released a commemorative coin at a grand event in Mumbai.
मैं आप सभी को रिजर्व बैंक ऑफ इंडिया के सभी कर्मचारियों और अधिकारियों को आरबीआई की स्थापना के 90 इयर्स की बधाई देता हूं।
In August 2024, RBI hosted a mega global conference on digital public infrastructure in Bengaluru. The event witnessed participation from 28 central banks and global financial institutions and showcased the bank's commitment to collaborations for the greater good. In its continued efforts towards thought leadership, the RBI organized thought leadership conferences on central banking challenges and financial stability. The Global South Policy Conference fostered international collaborations which will go a long way in strengthening global financial resilience. The RBI 90 quiz, which powered RBI's financial literacy and education initiatives, witnessed enthusiastic participation from students across India. Expert lecture series conducted across the country inspired employees, while sustainability initiatives like tree plantation and blood donation camps reinforced RBI's commitment to society. As part of RBI at 90 celebrations, the RBI Rajbhasha Conference was organized in Rajgir. Keeping up RBI's continued support to sports, RBI at 90 events incorporated competitions including football, cricket, table tennis, and badminton tournaments across India. Additionally, an art competition provided an opportunity to talented fine arts students from across the country. This defines RBI's journey across 9 decades in an artistic manner. As we celebrate 90 years of the Reserve Bank of India, we look ahead to the next decade and beyond with financial inclusion, digital innovations like CBDC and ULI, and a constant effort to stay future ready. The RBI rededicates itself to the cause of financial stability and economic growth of the country. Reserve Bank of India, 90 years of stability, trust and growth.
Though we mark completion of 90 years today, the journey continues. अब हमारा सादर निवेदन माननीय राष्ट्रपति महोदया से कि भारतीय रिजर्व बैंक की इस ऐतिहासिक यात्रा को चिरस्थायी करने के लिए अपने कर कमलों द्वारा एक विशेष कस्टमाइज्ड माई स्टैम्प का विमोचन करने की कृपा करें। मंच पर विराजमान गणमान्य अतिथियों से भी निवेदन है कि कृपया विमोचन में शामिल हों। यह कस्टमाइज्ड माई स्टैम्प रिजर्व बैंक की अविस्मरणीय यात्रा का प्रतीक होगा। बहुत बहुत आभार माननीय राष्ट्रपति महोदया का और आप सभी विभूतियों का। अब हम विनय करते हैं माननीय केंद्रीय संचार मंत्री श्री ज्योतिरादित्य सिंधिया जी से कि कृपया अपना संदेश दें।
Honorable President of India, respected Draupadi Murmu ji, Governor of Maharashtra, C.P. Radhakrishnan ji, Chief Minister of Maharashtra, Devendra Fadnavis Sahib, Deputy Chief Ministers, Eknath Shinde Sahib, Ajit Pawar Sahib, Governor of one of the most profound institutions that form the foundation of our Republic, the Reserve Bank of India, Sanjay Malhotra ji, esteemed guests,